we got on a fiat monetary standard, and it got worse, and it's kind of gotten progressively worse. Most recent being, quantitative easing and 0% interest rates and, bank bailouts and so on and so forth that have just basically changed the financial rules of the game in a way that is extremely unfair to anyone who doesn't know how to play that game, which is to say average citizens get screwed by inflation, and the financial people and government people who know how to game the system, they get wealthier. And so, America was founded on the principle that, kind of equal opportunity for all, and we're not really living up to that in the financial sphere.
On this episode of What the Finance Podcast, I have the pleasure of welcoming back Larry Lepard. So Larry is the managing partner of Equity Management Associates, been a professional investment manager for multiple decades, is a vocal advocate for sound money, and he's recently released the book, The Big Print, What Happened to America and How Sound Money Will Fix It, which we can see on the screen. It looks very nice. But yeah, Larry, thanks so much for coming on the podcast.
Oh, thanks, Anthony. Nice to be back with you again. It's I always enjoy our conversations.
Yeah, looking forward to speaking. If we look at, maybe we can start on an easy question. What happened to America? Maybe not so easy.
Well, no, it's pretty simple actually. We got on a fiat monetary standard, and it got worse, and it's kind of gotten progressively worse. There were a lot of steps along the way, but if you want to, the big ones were the printing of the greenback in the Civil War, and then the Federal Reserve in 1913, and probably the biggest one was going off the gold standard or the gold exchange standard in 71. Because that's when inflation really started to take off and became a serious problem. And, even after that, then there were various additional steps, most recent being, quantitative easing and 0% interest rates and, bank bailouts and so on and so forth that have just basically changed the financial rules of the game in a way that is extremely unfair to anyone who doesn't know how to play that game, which is to say average citizens get screwed by inflation, and the financial people and government people who know how to game the system, they get wealthier. And so, America was founded on the principle that, kind of equal opportunity for all, and we're not really living up to that in the financial sphere. So that's kind of the thesis.
And it seems like, if we look back, it's sort of the Fed, it's the Greenspan put, it's all these, all these different steps that have evolved since the 70s, where, Bretton Woods sort of was abolished. And it just seems to have slowly crawled, as you say, and then
it just kept getting worse and worse. And they modernized the Commodities Act. They got rid of Glass-Steagall. They bailed out LTCM. I mean, at each step of the way, we just kind of made the financial system more friendly to the bankers and insiders and less friendly to everybody else, because it's the everybody else that pays for the inflation through higher grocery prices and so forth. So, and the book details that. There's kind of, just to give a little overview, the first half of the book is the problem. Why I wrote the book, because I felt like, what's going on in America is not really fully understood by many people, and it's going on in the world, really. And a lot of people just don't understand why. They know something is not right. They know the inflation hurts them. They get all of that, but they don't know why. And the politicians say, well, it's a greedy corporation. That's not true. It's not the greedy corporation. So, so I thought, well, I'm going to lay out and explain how we got to this position we're in, and all the steps along the way. And then, of course, the second half of the book is really the solution. So the first half of the book is actually kind of depressing. Like, shit's broken, and we're all kind of hurting, but it's facts. And I've got a lot of charts in there to support it. The second half of the book is the good news, that we've got these technologies that are coming along, and we've got decentralization, we've got the internet, we've got a lot of positive things happening, and that old system's going to die, and a new, better system's going to emerge. And we're in that process right now, a big change. Some have referred to it as a fourth turning, which is kind of a change of the rules. And so, I'm very optimistic about where we're going and how much better it's going to get. But the book was actually also meant to help people kind of address getting through, the period of change between this old system that worked in one way and the new system that's going to work in a completely different way, right? So, and obviously Bitcoin is a big part of that. And so I've explained in great detail what Bitcoin is, how it works, what people need to consider, and why it really is the best way to protect themselves and protect yourself. And you're not only protecting yourself financially, you're also making a vote for a fairer system. So that's kind of the background.
Yeah, okay, yeah, makes a lot of sense. And if I look back at it as well, if we sorry, I'm sort of still in the historical mode. 2008 seemed to be
Sure.
the big shift where it was like, yeah, this is,
That was a big
as you
one.
said, that they bailed out the banks. Yeah.
Yeah, that was, the title of the book is The Big Print. And I believe that we have another big print in our future, really almost just because of mathematics. I mean, the way they're growing the debt, you have to print the underlying base money or else the thing collapses. But we've actually already had two big prints. I mean, more notable ones. We've had more before this, but the first one was really 2008, and that was a big one. The Fed balance sheet went up 3 or 4x, and almost 4x, and it took a bunch of years to do that. But there was a lot of money printed in that. The last big print, as we all know, is the COVID event, where in under 2 years they grew the money supply by 40%. So that was an even bigger print in a shorter period of time, and so I've likened the progression here to being somewhat like childbirth, where the contractions are getting, quicker and they're getting stronger. And I think we're gonna have another big print, as we hit the wall here on the current level of debt that we have. And I can't say with any certainty when that's going to happen because nobody can see the future. But I do know mathematically it has to happen, and I think it'll happen within the next year or two. So.
Yeah, okay. It is it's quite scary. I think that's on the horizon, but it does seem that how long can this thing survive? Because it seems, as you said, people are saying 2008 is the collapse of it, and they started printing, and then 2020.
Yeah, I thought it was
and
over
then
in
even
2008, by
recently,
the way.
yeah,
Yeah, it shows you how wrong I was. But go on. Yeah.
yeah. But can they not just do this again and print a bucket load of cash and then
Well,
it'll
they can, but they can,
yeah.
and whether the whole thing blows up or not is really an open debate. And they could reset the currency. There are a lot of things that could happen. But one thing you do know is they do have to print a boatload of cash, and you do know that will create inflation. And so, at a minimum, you can put yourself on the right side of history by being in inflation protection assets. Whether it leads to, hyperinflation, a blow up, a complete change of the system, and at what pace, or some kind of a monetary reset, none of us really know. I mean, it's impossible to predict. But historically, there's a good chart in the book by a money manager who did a study that showed when countries get to a debt to GDP ratio of about 130 to 130%, the size of the total debt outstanding compared to the size of the GDP, it tends to lead to very high inflation or a currency event, as in hyperinflation or a reset. And so, and it's like 11 cases in the last 100 years. It was like 11 out of 11 cases it happened. And by the way, we're at about 125% debt to GDP. So it's really a problem. and I mean, can we kick the can for a few more years? Sure, of course we can. But can we kick it for 10 or 15 more years? I don't think so. There's another chart in the book that shows just the recent debt growth, which is rather stunning. In the last 4 years, we added 11 trillion to the outstanding federal debt of the United States. It took us 220 years to create the first 11 trillion. So, the pace is accelerating. I mean, another thing that's not in the book because it came out after the book was written is that the U.S. federal deficit for the first two months of fiscal 2025 was up 64% year over year compared to 2024. So, those people who think it's going to get better, that's certainly not what's happening based on those numbers. And I'm somewhat sympathetic to the notion that DOGE will help. The government Department of Government Efficiency that Elon is pushing so hard on. And they found some inefficient things, and they will definitely cut expenses. But my belief is that we're way too far gone for him to solve it completely. I mean, it could have an impact at the margin, but it's not going to solve it because 80%, the government spends $6.75 trillion a year. 80% of that are in areas that are kind of considered sacred, Social Security, Medicare, defense, and when the interest costs, you got to pay the interest or else you're going to default. So they're talking about the part they can cut is 20%, and that's like $1.3 trillion. Well, the deficit's running at a $2.4 trillion rate right now. So even if you wiped out the other 20%, you'd still have a deficit. So it's a really deep problem. And, we've seen this. This is not something new. We've seen this historically in smaller countries. We know what happens in those countries. They have currency crises. They have high inflation. They have hyperinflation in some cases. What we haven't seen before, the reason why this is such a scary and interesting experiment is we've never seen the country with the world's reserve currency behaving in such an irresponsible fashion. We've never seen that before, but here we are. That's what we have. So it's a problem.
Yeah, and I think there's some great books on sort of the collapse of empires, and they talk about. I think you said there the debt to GDP. They also talk about military spend being extremely high, which seems
exactly. It's a great point you bring up, and I think one of the things that is often underappreciated. The U.S., I believe, wasted $8 trillion in the Middle East post 9/11. Chasing phantom weapons of mass destruction and securing oil and so on and so forth. $8 trillion. I mean, there's your problem right there. That's why we have so much debt. If we hadn't done that, if we'd spent that on infrastructure or efficiency or nuclear power or other areas that would have benefited the country, we'd be in a much better position than we are today. Right now, we're in a very bad position because we wasted that $8 trillion.
Yeah, agreed. And I think the interest actually is it's not. So I think from that book I remember, it's not actually the debt; it's the interest. And then
Well,
it seems like
that's exactly right. I mean, you're bringing me to kind of the point of the debt doom loop. So the problem is when you have a government that's running deficits and they have a large burden of debt. It's one thing when the interest rates are low, they can, they're paying a small amount of interest and maybe that doesn't blow out the deficit. But when Jay Powell started to raise rates post in 2022, post the COVID, money printing, he rapidly raised them very quickly raised them up into the fives. And what that did was it took the U.S. federal government's interest expense and took it from 400 billion to a run rate right now between 1.3 and 1.4 trillion. So, that's just money we're paying on all the old debt we have, not to mention the new debt. And so they, that made the budget deficit grow. And, 1.3 trillion is half the deficit run rate today. And sadly, it's going to get worse because, okay, so you can see there's kind of a reflexive loop here. If interest rates go up, the cost of the debt is higher. If the cost of the debt is higher, the federal deficit is higher. If the federal deficit is higher, they've got to sell more bonds. And the bonds, that represents supply in the market for bonds, which the interest rate is driven by supply and demand. So you got to sell more. If you got the same demand, the interest rate's going to go up more. So, okay, now you got a higher interest rate. And guess what? That makes your deficit even bigger, which means you got to sell more bonds. You can see where I'm going here. It's a negative feedback loop that gets worse and worse and worse. So that's kind of what I believe we're on the cusp of. And that's why what I refer to is what we're in right now. And people don't want to admit this. Nobody likes these words. And I'm not trying to be a doomster or panic artist, but just based on looking at historical patterns, we're kind of in a sovereign debt crisis. I mean, the U.S. federal government is really almost technically bankrupt. Now, there are those who say we can solve it. We can cut all these expenses. We can raise taxes. And maybe we can. But if we go in that direction, we're going to have a really big economic slowdown because, the stock market is very heavily, it's a big part of giving people confidence. They know their stock accounts are good. They have confidence to spend. If the government starts spending less and everything turns over and rolls over, then we're going to see a real big downturn. And by the way, downturns tend to blow out the budget deficit as well. So in 2008 and in 2000, when that bubble burst, the budget deficit went up like 6%. And in 2008 of GDP, and in 2008 when that one burst, it went up like another 9%. So, so they're really, I mean, the policymakers in Washington D.C. are kind of trapped. And that's sad, but it's just what it is. And all we can do, all us investors and people who are trying to save for our futures can do is, as I say, own things the government can't print because the government sadly is going to have to print more money.
Yeah, and it seems like the Fed's trapped as well. They're trying.
That's right. Yeah.
They want to put interest rates down, but then the bond market's starting to sort of revolt.
That's exactly right. And what they might do is they might revert to something what some people know, but it's called yield curve control. This debt to GDP ratio that we had this once before. We had it coming out of World War II, and because we spent a lot of money to win the war that we didn't have, we borrowed it and spent it. And And the government was smart enough back then to figure out that if interest rates run up, they were going to have a real problem. So they actually said, you know what, we're going to just cap these interest rates. We're going to cap the short end at 3/8 of a point and the long end at 2.5%. And so they did it. And it ended up, a lot of people ended up selling their bonds to the government, and the Fed balance sheet grew enormously during that time frame. But then in that case, what saved them was when the war was over, the demographics were pretty good. So all those guys came back and started, getting married, having babies, buying houses, buying cars, and we grew our way out of that problem because we were a young, still relatively young industrial economy, and we needed a lot of stuff. And so, GDP grew rapidly and the debt to GDP came down. And then they were able to let the interest rate market go free again. They didn't have to, use yield curve control after a certain period of time. But yes, I mean, I could see a situation where in this time around, the government is forced into doing some form of yield curve control because they just can't have higher rates. If they do, things are going to break.
Yeah, but I guess if the US has to do that, then you're a bit concerned about the rest of the world.
Well, that's right. I mean, look, they're all, this is not a US centric or a US only problem. I mean, you've got it in spades in the UK. I mean, you saw the gilt crisis a couple of falls ago. I mean, it's all these governments have made too many promises. That's the problem. And they just can't fulfill the promises in real terms. Or if they do fulfill them, they can fulfill them in monetary terms because they can always print money to do it. But that debases the value of each monetary unit. So, and this is why, I mean, so I say we're in a sovereign debt crisis. People say, why? Prove it. What's your evidence to support that? I'll tell you, my first and most important evidence is gold's at a record high and going up consistently. And Bitcoin is very close to a record high. So the two monetary assets that the government can't print are performing extremely well against those things that governments can print. To me, that's a really big clue that we are in a sovereign debt crisis and the money is at risk, and fiat money is at risk. So,
yeah, and if I look at the UK, it's sort of stuck in and this is probably something the US will face as well. Stuck in this situation where they're worried about printing, so they're still printing, but they don't want to try and print as much. But then they go the other way and raise tax, but that's the opposite because then that just destroys growth. And then
look, they're just damn trapped. I mean, yes, and they're very creative. I mean, they figure a lot of ways to print and not call it printing. Like when Silicon Valley Bank blew up, they bailed it out basically and printed a lot of money to do it. And they called it the term lending facility. They had some fancy name for it and said it wasn't QE, it wasn't printing money, but it was. I mean, it was, and they'll do that again. I mean, they'll create things that they say are not printing money, but they are printing money. I mean, they just, because they have to. Without the money there, the whole thing collapses.
But yeah, there's been a lot of talk of sort of DOGE auditing Fort Knox and actually going in and then revaluing the gold and to the actual price. Do you see that as being something that could benefit the US?
I'm fascinated by everything that's going on in the gold market. I don't know if any of your listeners follow it, but the LBMA has been shipping a large amount of gold to the COMEX, and the COMEX they're doing that because a lot of people are taking delivery off the COMEX because they're worried that the gold's not really there. And those of us in the gold community are very suspicious of the Fed's claim that we have 261 million ounces of gold in Fort Knox, West Point, and Denver, and San Francisco. And the reason we're skeptical is because since 1953, it hasn't been audited. And, they ran a gold pool, a London gold pool from 61 to 68. And, some of it easily could have been sold into that. And, it was a big honeypot that maybe the government tapped. We just don't know. But the fact that, it hasn't been audited, and the excuse, by the way, a lot of people have asked for that audit, Ron Paul and others over the years. And the excuse was always, it would be too expensive to audit it, which is just hilarious to me. I mean, you got a government spending, $6.75 trillion. I mean, just counting a bunch of R's. I mean, that, maybe it would cost a couple $100,000, but it's compared to some of the other things government spends money on, it may not be a better use of the money. So, Scott Bessent, the Treasury Secretary, just came out this morning and said he's sure the gold is there. Now, that to me was like a tell, because he knows that people are worried about it. And so he felt like because generally speaking, they wouldn't even talk about it, right? They don't, I mean, government officials are loath to talk about gold because they know it doesn't help their case. So the fact that he had to say something indicates to me that he's getting questions about it, right? So that's point one. Point two, he parroted what has always been the line where I'm sure the gold is there. I'm not worried about it, which of course, he's an official of the government. He kind of has to say that. But, and then he went further and he even said, and any senator is welcome to come take a look at it. Well, I hope somebody takes him up on that. And it'll be somewhat tough to find, somebody who can go down and do it. And probably more importantly, the tougher thing is actually the gold may be there, but what you don't know is what's happened in the Exchange Stabilization Fund, what's happened in the Federal Reserve's dealings with. The Federal Reserve is authorized to deal with central banks, large entities all over the world. And what you don't know is how many times over has the gold been sold? How many people think they own gold but don't? I kind of compare it to a game of musical chairs, where those of us who are in the gold community have watched this for years as they've sold more and more paper claims to the same ounce, in our opinion. And whether it's 10 claims per ounce of that we hold or 100, it doesn't matter. If suddenly everybody starts to doubt the trustworthiness of the people who hold the gold and says, yeah, I get it, I got a claim on it, but I just assume, why don't you just give me the ounce? Why don't you deliver it? Well, that's like the musical chair game where the music stops, everyone looks for a chair, and there aren't enough chairs. So yeah, that's kind of going on in the background. But to be fair, I've seen this stuff before, and they'll find the gold somehow, and they'll probably hold it all together. I mean, I think at some point that scheme could blow up, but I would not be prepared to say that at some point is right now. I mean, having said that, there is kind of smoke coming out of the windows. I mean, the lease rates are high, the delivery times are long. There was a Swiss refiner that recently said they didn't have the ability to sell any bars for the next 6 weeks, 8 weeks. I mean, so there's notable tightness in the gold market right now, which again, I think that reflects the notion that more and more people, big sophisticated investors, wealthy individuals, countries, all the above, are beginning to recognize that we are in a sovereign debt crisis. And they're beginning to think to themselves, well, how does one protect against that? And the oldest form of money that can't be debased is gold. I mean, certainly central banks have got that. I don't have the charts right in front of me, but if you Google them, you can find them pretty easily. Central bank buying of gold has been very large and consistent and growing for the last 5 years. So, and central bankers are monetary wizards who kind of watch things very carefully. And so the fact that they're doing that, that's a tell, that they think it would benefit their country to own more gold rather than less. They're not selling their gold. There are other times when central banks have been net sellers of gold, but that's not true at all right now. No, they're making record buys. So it feels to me like there's a knowledge and a trend coming where, sound money assets, gold, which is analog sound money, and Bitcoin, which is digital sound money, are going to perform pretty well. I mean, I know that on Bloomberg, the analysts are saying that the $2,900 gold price, they're projecting a year out, it's 22, that this is kind of a blip and it'll get solved and go back down. And I'm like, what are you guys thinking? I mean, I think in a year out, it's going to be 4. I think in 3, 4, 5 years out, it could be 10,000 an ounce. I mean, it's, there's a lot of demand behind this. And when a gold bull market gets going, it tends to really multiply in value. So it's similar to Bitcoin in that way. So.
Yeah, do you see there being sort of divided, I guess, globally? Because I've heard an argument that maybe it's because people are worried about tariffs, so they're trying to sort of get there.
That's certainly that's a real fair. That's fair, and that could be a part of it. That could be part of why people are trying to bring it back to the United States because of the tariffs. But I'm not sure that's the whole story. I think that's a possible explanation for part of it, but I also think there's more to it than that. I think it's other stuff as well.
Okay, and then why? So you're sort of proponent of both gold and Bitcoin, but why do you think that Bitcoin could be more of a solution?
Well, so I mean, Bitcoin's better than gold in terms of sound money. I mean, gold is old-fashioned sound money, and it has the benefit of it's been around for 5,000 years. Everybody knows what it is, and it's not very volatile in terms of its price. The biggest drawdown ever was right after 1980. It was like in the low 30s. As you know, Bitcoin has had multiple drawdowns of over 70%, 3 or 4 of them. And that's because we're in early days in the adoption curve, and it's either going to the moon or it's dead. The emotions on it are quite extreme. But Bitcoin enjoys a couple of really substantial advantages over gold. One, you can verify it. You see the blockchain. Somebody say, "This is my address." You can look at it and go, "Oh, yeah, you do have it. I get it." Two, you can move it very quickly. You can in 10 minutes you can do a transaction. I mean, try doing that with gold. You got to load it onto an airplane or boat, and it's heavy. You got to verify it. And there's been a lot of fake gold out there. There've been guys who've They're bleached in China where they were taking tungsten, which is close to the same weight, and coating it with gold, saying this is a gold bar, but it was really a tungsten bar with a gold wrapper on top of it. And you can lie about how much of it you have because it's centralized, not distributed, whereas Bitcoin is distributed, not centralized. So everyone can look at the entire blockchain and know where the coins are and how many are in each address and so on and so forth. That's verified on a regular basis. So, China claims they have a certain amount of gold. I think they have more than they claim they have. We claim we have a certain amount of gold. I think we have less than we say we have. I mean, it's just a more opaque market. And, when Bitcoin got invented, they created triple entry accounting, a debit and a credit, but also a third entry, which is somebody can look at it, the ability to see it from outside the system. You can go and see the address and see that the money's really there, which is a very powerful idea.
Yeah, definitely. And I guess, do you see sovereign? Do you think sovereigns have bought Bitcoin? Because I guess I don't know if there's a.
I do. I mean, we know El Salvador did. We know Bhutan has. We know, the U.S. hopefully hasn't sold the 200,000 coins they have, and they're talking about a strategic crypto reserve. I was in the Middle East in December, and we subsequently learned that what I heard as a rumor there is in fact true, which is that the United Arab Emirates has been hodling Bitcoin. So has Oman. So have the Saudis. From what I hear coming out of Putin, and he's talked positively about it, thinks you can't stop it. And you watch the hash rate over in Russia, I think there's a decent chance that they're accumulating it. The one I think is kind of missing the boat, and I could be wrong on this, they're very smart people, but it's China, because they've typically been very hostile towards it, and they've been huge buyers of gold. And so my sense is that they've made the bet on gold and have probably ignored Bitcoin. I'd like to see us, in some kind of a currency reset event, which I think will have to happen to deal with the terrible inflation that's downstream here. In some kind of a currency, reset event, I'd like to see us just skip gold and go to Bitcoin. I think it would give us a strategic advantage over, China, Russia, and the Middle East. But, as a practical matter, there are probably a lot of people who are just like, oh, no, gold is tried and true. Let's go there. So we'll have to see how it unfolds.
Yeah. And I guess a lot of people say that, you need constant increases of the money supply to have growth in your economy. Is that true, or is that a myth?
No, it is. Well, okay, let's talk about that. It's complicated, and the book talks about this, okay? So the Keynesian model suggests that you have to continually grow the money supply, and you have to have a certain level of inflation, or else you run the risk of falling into a deflationary collapse like the Great Depression. And that model is wrong. That's a lie. It's not true. But they've sold it to us because it benefits government and it benefits financiers who are generally Keynesians. Deflation is actually a very good thing and something you want, because what it means is you can buy. Deflation suggests that your economy is getting more efficient. You can buy more for less in the future, and that savers are rewarded, not debtors. It's the natural state of economies. It's the way the United States was in the 1900s or 1800s when we were on the gold standard. And it's really the highlight of Jeff Booth's book, where he says, deflation is the natural condition of a well-functioning economy. Things should get more efficient, cheaper, et cetera, over time. The problem is the monetary system we're running is structured with debt and more debt on top of the old debt. And so it's set up in a way that actually requires inflation, because if you had deflation, the debts would go bad. And so the conflict here is we're trying to run an inflationary, a deflationary economy where technology is allowing us to do more for less and cheaper and faster. We're trying to run that on top of a monetary system that needs just the opposite of that. They need constant inflation, or else they're going to die. And so it's really a challenge, to integrate those two thoughts. But I think that over time, the sound money side is going to win out, because I think what will happen is the inflation's, we're in the 70s in my view. We've had one big wave of inflation. They raised rates, they tamed it. They'll now probably start cutting. We'll get some more unemployment, and some rule will get broken solidly. I mean, it was broken, but then it traded right back to what it started at. And they'll start printing. They'll have to, because if they let it die, I mean, that just doesn't serve their interest. It doesn't serve anyone's interest. And so, what the government always kind of figures out, it's easier to explain away the inflation than it is to explain away an economic collapse, like the Depression. So I think there's a very high probability we will have serious inflation in our future.
And you don't see any way that maybe they could, DOGE comes in, it's very successful, it sort of almost resets the, I guess the current system, maybe AI has this large amount of growth that sort of helps us grow out of the,
Yeah, I mean, look, I mean, another thing, I mean, there are a lot of things that could save the system. I mean, cutting expenses, raising taxes, although it'd be recessionary, a huge burst of productivity growth would definitely help. I mean, and AI is certainly poised to make the world a better place and do a lot of cool stuff. AI kind of reminds me, though, of the dot-com in 2000, the dot-com bubble in 2000, which I was around for and participated in. And at the time, it was like the internet's just going to completely change the world, and you can't make money and can't lose money investing in any internet project. We don't have enough fiber. We'll never have enough fiber. The traffic's going to go exponential from now until forever. and that was how Cisco went up as much as it did, and all the other stocks went up as much as they did. And you know what? They got ahead of themselves, and there were some really stupid ideas brought out in finance, and they failed. But the internet didn't go away. The stock, some of the high flying stocks did, but it reconsolidated down to the lower level, and we were able to add. We from there we kind of went forward. So.
Okay. Yeah. And then, it took 10 years to get back to the highs of many of those.
Well, that's right. I mean,
11 years.
and some of them didn't make it back. And what really happened actually is there was a change in the leadership. I mean, when in 2000, when that bubble started bursting, Amazon was just a bookseller. It was kind of a dream. Google was still early search. There were other forms of search. And Facebook, I don't think even existed until a little bit later. A lot of the businesses that became real businesses on the internet, we were a long way from having Zoom and from being able to talk halfway around the world, on our computer, right? But you could see stuff was coming. I mean, you knew there would be new technologies coming. That this internet thing had just changed the rules of the game in a big way. But it kind of outran the excitement, after a week or so. And you got to continually keep it interesting, or else you lose your audience.
Yeah, definitely. And I think that's the thing. It was sort of slowly, then quickly, all at once. But if we, could this also just create another similar system where the Bitcoiners are, extremely well off, sort of these overlords almost, and then the rest of the people who didn't jump on the bandwagon sort of struggle? Do you see the risk of that?
See, I don't think so. I mean, yes, obviously people who own Bitcoin are going to be better off, but they're going to sell. Some are going to sell their Bitcoin. Bitcoin's going to get more widely distributed, and as that occurs, and by the way, it's not too late to get in. And so as that occurs, it's going to become money for everybody. It always has been money for everybody. And the thing that's really great about it, Anthony, is that it's fairly distributed in the sense that nobody has an advantage over anybody else. Nobody. It's a fair system, and that's and human beings, smart, ethical human beings, want fairness in society as much as they can, because it just makes society better. And this is a mathematical machine for creating fairness in the money, which is we've never seen it before. It's a huge innovation. So, and back in 2000, I mean, I couldn't see what was going to happen. I mean, I knew the internet was important. I knew it was going to change things. I knew businesses would emerge, but I didn't know what they were. I mean, eBay came along. I mean, that was a good idea. Online swap meet kind of thing. I mean, there were a number of them. There's so many of them that grew out of it. And I think the same will be true of the Bitcoin space. That there are going to be all kinds of obvious implications and applications for this kind of money. And when the layer 2 network starts working really well, we'll all be zapping each other's stuff. And it's gonna get really good, but it's going to take time to have the infrastructure built between here and there right now.
Yeah, and I've heard you talk a lot about how it might be. It does sound like it could be quite difficult to shift away from fiat to sound money, but on the other side, there's this something quite great.
Yeah, I think that's right. I mean, it's the transition period is going to be a rocky and bumpy period. I sadly, I don't think there's any way to avoid that. I think some of the people who own bonds are going to really have a hard time, because The problem is it's just a classic old problem. We've made too many commitments, too many debt commitments we can't honor. So they have to be debased in real terms, or the debt has to collapse. I mean, people who hold the debt, the debt goes bankrupt. It's worthless. I mean, I've in the past compared the U.S. government to like the family that is taking out credit cards and using the new credit line on the new credit card to make the minimum payments on their old credit cards. And that works until you find you can't get any more credit cards. You know what I mean? And then you suddenly got to start paying the debt back, and your income, that family may not have the income to do it. And that's kind of the United States. I mean, having the world reserve currency, we could just keep taking out credit cards and run up debt, and people would pay for it. But now people are kind of moving away from the dollar. They're starting to choose gold as an alternative. The U.S. bond market is not. I mean, a lot of the U.S. bond market has shifted towards the short term end of the curve. And the reason that's rumored that that's occurring is that, foreigners and others don't want to buy 10-year government bonds because they recognize the government's got to print money and they're going to get debased. If you look at the game, the way it's constructed right now, the biggest sucker at the table is anyone who would buy a long-term bond. Because while they may be getting 5% interest, what they don't realize is just how debased the currency will become in the next 10 years or 15 years. It's going to be terrible. And so they won't get their money back on a real basis.
Yeah, and that does sound similar to sort of post-war, and that's, I think, what
Yeah.
happened in the UK and I'm sure the US as well.
Yeah, they had big inflation in that time frame too. The bondholders got killed.
Yep. So Larry, thanks so much for your time. We've sort of gone in all different places.
Yeah, sorry, I bounced around a bit, but thank you very much. I really enjoyed talking to you. And let me just, if again, it's the book. Just again on a description of the book. I wrote it to make it. Because there are a lot of great Bitcoin books written, right? I mean, the Bitcoin Standard is the best one ever, and Lynn Alden's is kind of close behind it, as is Jeff's, and those are great books. I've given them to people, but sadly, average Americans, they're a little too textbooky for average Americans. So I've tried to make this a little bit more of a narrative, a little bit more fun. I've told more personal stories and anecdotes, and I've kept it simple because what I want. If we want to get to a sound money system, which I do, we've got to get a big political movement saying we need sound money. If we want to get a big political movement, that means we got to get a lot of people. And there are a lot of people who aren't really interested in focusing on money or finance or anything related to this. But my hope is that I think this book is a really good tool for introducing them to the system and how the financial system and how broken it is. And then getting them to think about, okay, yeah, given that, what can I do to make it better? And that's the Bitcoin choice. And so it's kind of targeted at, just anybody who is interested in learning more, anyone who's suffering from inflation or anyone who's interested in learning more about what's going on in this fourth turning. This is a good book to I think to educate them. So that was the goal.
Yep. And is that the message you want people to take away from the book and the conversation? Or
it really is. Yeah, it really is. I mean, I hope, obviously, I want to sell a lot of books, make a little money. I mean, surprisingly, you don't make much money on selling books. The margins are really skinny. Amazon and the printers take most of the money. But more importantly, what I really would like to do is I really want to change the narrative and get, a sound money movement. I want to get the sound money thing out of just the shadows of gold and Bitcoin guys and girls and into the broader conversation of this is what we got to do if we want to have a productive society. And a lot of the problems that we solve or we're suffering from can be solved by going back to a sound money, system. So that's the real takeaway. And so if you buy it, you like it. Hopefully you buy more of them, you give them to your friends, you pass it around, we got to get a consensus to go in this direction. And I think the book's a good tool. I mean, I wrote it and I've gotten feedback on it that, it does that mission. So that's hopefully, everyone will, if you're a Bitcoin, you believe in Bitcoin, you don't need to read this book. I mean, you'll learn some history in the first half because I go deep on the history of how we got here. But in the second half, you'll know everything I'm writing about, the difficulty adjustment, all of it. But what I think you'll find is, I think, once you read, you'll say, this is the book I could give to that friend of mine who's a skeptic. And they might read it and go, oh, you know what? I see he's got a point. You know what I mean? It's worth considering. So I think the book falls into the bucket of, because I counter objections. I have a chapter called skepticism that my wife helped me write. I mean, I really kind of come at it from every angle because, people are afraid of this stuff. And I understand why. I mean, Sam Bankman-Fried didn't do any of us any favors, right? The crypto stuff is bad, and it's distracting, and it's not Bitcoin, as you and I both know. So, but this book deals with all that. And, one of the best reviews I got on Amazon, I read it. The guy said something, it was very simple. He said, if you give this to somebody and they really take the time to read it and they don't come out of this thing wanting to own Bitcoin, they're crazy. You know what I mean? Because I come at it from every single angle, the case for it. And it's kind of like, I'm just trying to pound it into their head. Like, you should buy some Bitcoin, so.
Yeah, definitely. Well, hopefully they do. So, yep,
Well,
I'll
that's
put a
the
receipt.
idea, right? That's the idea. Yeah.
Exactly. But, yep, thanks again for your time, Larry.
Oh, good. Thank you, Anthony. Enjoyed talking to you.
Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right. Thanks again.